Hello everyone, welcome back to my YouTube channel. Today we are discussing about the Vietnamese dong, the latest economic developments coming out of Vietnam, and why many global investors, currency watchers, and financial analysts are paying close attention to Vietnam's economy in 2026. Over the last few years, Vietnam has continued to emerge as one of Asia's fastest growing economies, and now new reports from major securities companies are creating even more excitement around the future of the Vietnamese dong, economic expansion, stock market growth, foreign investment, and the possibility of stronger currency stability in the years ahead. Many investors are now asking whether 2026 could become a turning point for Vietnam's financial system, and whether the Vietnamese dong may gain stronger international confidence as the country enters what experts are calling a historic economic transformation period. According to the latest analysis from leading securities firms, 2026 is now being described as one of the most important years in Vietnam's modern economic history. Analysts say the country is entering a brand new development cycle supported by ambitious government reforms, rapid industrial growth, infrastructure expansion, technology investment, export strength, and a targeted GDP growth rate of 10%. That growth target alone has attracted significant international attention, because very few economies in the world are currently aiming for double-digit economic expansion at a time when many global economies are slowing down due to inflation pressures, geopolitical tensions, and weakening international trade conditions. Financial experts believe Vietnam is positioning itself as a major economic powerhouse in Southeast Asia. The country has already become a key manufacturing hub for electronics, textiles, consumer goods, and technology products, and many international corporations continue shifting production into Vietnam as companies seek alternatives to traditional manufacturing centers. This global supply chain restructuring is expected to benefit Vietnam significantly in the coming years, especially as the United States and China continue adjusting their trade relationships, and multinational companies look for stable, business-friendly destinations with competitive labor markets and improving infrastructure. The latest report from Dinar Securities Joint Stock Company states that 2026 will mark the beginning of Vietnam's new 5-year socio-economic development plan. Analysts believe this plan represents one of the boldest economic policy cycles in the nation's history. The government's aggressive 10% GDP growth target is not simply about short-term expansion. Instead, economists say Vietnam is attempting to close the development gap with more advanced economies and move closer toward upper middle-income country status over the next several years. That ambition is increasing optimism among foreign investors who view Vietnam as a long-term growth opportunity rather than just an emerging market trade. One of the most important points highlighted by analysts is Vietnam's stable macroeconomic foundation. Despite global economic uncertainty, Vietnam has managed to maintain relatively stable inflation, controlled public debt, and strong export performance compared to many neighboring economies. This stability has become a major factor supporting confidence in the Vietnamese dong. Currency traders often look for economies with stable fundamentals, strong manufacturing output, rising foreign direct investment, and improving government policy environments. Vietnam appears to be strengthening in all of those areas simultaneously, which explains why many international observers are becoming increasingly bullish on Vietnam's economic future. Another major reason for optimism surrounding the Vietnamese dong is the expectation of continued growth in corporate earnings. Analysts say Vietnamese businesses are expected to benefit from increased domestic consumption, export demand recovery, digital transformation, banking sector improvements, infrastructure spending, and stronger industrial activity. As companies generate stronger profits, stock market confidence may improve, potentially attracting larger volumes of international capital into Vietnam's financial markets. increased foreign investment inflows often strengthen overall confidence in a nation's economy and can contribute to currency stability over time. Many market analysts also believe Vietnam could soon receive an important stock market upgrade from frontier market status to emerging market status. This possibility has become one of the hottest discussions among investors in recent months because such an upgrade could trigger billions of dollars in additional foreign investment into Vietnamese equities and financial assets. Global investment funds often allocate more capital to countries that achieve emerging market recognition. If Vietnam successfully secures this upgrade, experts say it could become a game-changing moment for the country's financial markets and long-term investment outlook. At the same time, the global economic environment remains an important factor in Vietnam's outlook. VN-ranked analysts noted that worldwide economic growth is slowing partly due to ongoing trade tensions between the United States and China. However, many experts believe the most volatile phase of those tensions may already be passing. The United States has increasingly moved toward negotiations and new trade agreements, and this changing environment may actually create additional opportunities for Vietnam. As companies diversify manufacturing operations and supply chains away from concentrated regions, Vietnam stands out as one of the biggest potential beneficiaries. International corporations are continuing to expand operations in Vietnam because the country offers competitive manufacturing costs, improving logistics infrastructure, strategic geographic positioning, and government support for industrial development. This trend has already transformed Vietnam into a major exporter of electronics, semiconductors, smartphones, apparel, and industrial goods. Economists believe the continuation of these trends in 2026 could significantly strengthen Vietnam's economic resilience and improve long-term investor confidence in the Vietnamese dong. Another major factor influencing currency expectations is the outlook for global inflation and interest rates. Analysts believe easing inflation pressures worldwide may create room for more accommodative monetary policies across several major economies. If central banks begin reducing interest rates gradually, emerging markets like Vietnam could become even more attractive to international investors searching for growth opportunities. Lower global interest rates often encourage capital flows into higher growth economies, and Vietnam's strong expansion targets may position it as one of the top destinations for international investment capital. At the same time, experts caution that interest rate reductions may not happen uniformly across all countries. Some economies may cut rates faster than others, depending on inflation conditions, labor market trends, and political considerations. This means Vietnam will still need to maintain disciplined monetary management and careful fiscal planning to preserve investor confidence. Fortunately, analysts believe Vietnam's policymakers are showing increasing sophistication in balancing economic growth with financial stability. The Vietnamese banking sector is also attracting increased attention from international observers. Over recent years, Vietnam has implemented reforms aimed at strengthening financial institutions, improving transparency, reducing non-performing loans, and modernizing banking regulations. These reforms are seen as essential steps toward creating a stronger financial system capable of supporting rapid economic expansion. A healthier banking sector can increase lending activity, stimulate business growth, encourage entrepreneurship, and improve overall economic efficiency. These developments may indirectly support the long-term stability of the Vietnamese dong as economic fundamentals continue improving. Vietnam's export sector remains one of the country's greatest strengths. The nation has developed into a global manufacturing and export powerhouse, particularly in electronics and industrial production. Companies from South Korea, Japan, the United States, and Europe continue investing heavily in Vietnam's manufacturing ecosystem. The country's participation in multiple international trade agreements has further strengthened its export competitiveness and opened access to major global markets. Analysts believe export growth could remain a critical driver of Vietnam's economic momentum throughout 2026 and beyond. Another area generating optimism is infrastructure development. Vietnam has been aggressively investing in roads, ports, airports, rail systems, industrial zones, and energy projects. Infrastructure modernization is considered essential for sustaining long-term economic growth because it improves transportation efficiency, reduces business costs, and enhances industrial productivity. Large-scale infrastructure investment can also create jobs, stimulate domestic demand, and attract additional foreign investment. Economists say these improvements may help Vietnam transition into a more advanced and competitive economy over the next decade. Technology and digital transformation are also becoming major pillars of Vietnam's future economic strategy. Vietnam's young population, growing middle class, rising internet penetration, and expanding digital economy are creating significant opportunities for fintech, e-commerce, software development, artificial intelligence, and digital banking services. International technology companies are increasingly viewing Vietnam as an important regional growth market. This growing technology ecosystem may contribute to stronger productivity growth and higher long-term economic potential. The tourism sector could also play a significant role in supporting economic growth and foreign currency inflows. Vietnam has continued investing in tourism infrastructure while promoting the country as a major international travel destination. Tourism recovery following global disruptions may contribute positively to service sector growth and help increase foreign exchange earnings, which can support currency stability. Despite the positive outlook, analysts also acknowledge several risks that investors should monitor carefully. Global economic uncertainty remains elevated, and external shocks such as geopolitical conflicts, trade disruptions, or unexpected inflation spikes could impact emerging markets worldwide. Vietnam's export-driven economy means the country remains sensitive to changes in global demand conditions. If major economies experience severe slowdowns, Vietnam's manufacturing sector could face temporary pressure. Additionally, while Vietnam's ambitious 10% GDP target demonstrates strong confidence, achieving such rapid expansion consistently will require effective policy execution, continued infrastructure investment, labor force development, and sustained investor confidence. Analysts say institutional reforms will be especially important because international investors increasingly prioritize transparency, regulatory stability, legal protections, and efficient market operations when deciding where to allocate capital. Still, many economists argue that Vietnam's long-term trajectory remains highly promising. Compared to many economies facing demographic decline or structural stagnation, Vietnam benefits from a relatively young workforce, expanding industrial capabilities, rising education levels, and strong integration into global trade networks. These structural advantages may allow the country to maintain stronger growth rates than many regional competitors over the coming decade. Currency watchers continue debating what all of these developments could mean, specifically for the Vietnamese dong exchange rate. While analysts generally avoid making extreme predictions about sudden currency revaluations, many agree that stronger economic fundamentals can gradually increase confidence in a national currency over time. Economic growth alone does not automatically produce dramatic exchange rate changes, but sustained investment inflows, export strength, stable inflation, improving institutions, and rising productivity can support long-term currency resilience. Some investors online continue speculating about major revaluation scenarios for the Vietnamese dong. However, professional economists usually emphasize that currency movements are influenced by many interconnected factors, including trade balances, central bank policy, foreign reserves, inflation differentials, global market conditions, investor sentiment, and geopolitical stability. Vietnam's government has historically prioritized economic stability and export competitiveness, meaning policymaker may continue managing the currency carefully to balance growth objectives with financial stability. One important point highlighted by analysts is that Vietnam's economic success story is increasingly attracting attention from institutional investors rather than just retail speculators. Large investment funds, multinational corporations, development banks, and international financial institutions are becoming more involved in Vietnam's growth narrative. This institutional interest often signals deeper confidence in long-term economic fundamentals rather than short-term market speculation. The Vietnamese stock market itself is expected to remain an important area of growth. Analysts believe rising corporate earnings, expanding market participation, digital trading platforms, and possible emerging market status could create stronger momentum for Vietnamese equities in 2026. If foreign investors increase allocations to Vietnamese assets, this could further strengthen financial market development and international recognition. Vietnam's government also appears increasingly committed to reforming institutions and improving the business environment. Efforts to streamline regulations, reduce bureaucratic barriers, modernize public administration, and support innovation may help accelerate economic modernization. Investors often reward countries that demonstrate commitment to reform and long-term policy consistency. Another major trend supporting Vietnam's outlook is the global diversification of supply chains. Over the past several years, many multinational corporations have sought to reduce overdependence on single-country manufacturing concentration. Vietnam has emerged as one of the leading beneficiaries of this restructuring because of its geographic location, skilled workforce, competitive labor costs, and trade agreement network. Continued supply chain diversification may drive additional industrial investment into Vietnam for years to come. Energy development is another critical factor in Vietnam's growth story. As industrial activity expands rapidly, the country must continue investing in reliable power generation and energy infrastructure. Renewable energy projects, manufacturing expansion, and industrial modernization are expected to remain priorities. Stable energy development is essential for maintaining investor confidence and supporting long-term economic growth targets. Many international observers now compare Vietnam's current development trajectory to earlier periods of rapid growth experienced by countries like South Korea and China during their industrial expansion phases. While every country follows its own unique path, Vietnam's combination of export-oriented growth, manufacturing expansion, infrastructure investment, and integration into global trade networks has generated considerable excitement amongst economists and investors alike. At the same time, analysts stress that sustainable growth requires balanced development. Vietnam will need to continue investing in education, workforce skills, healthcare systems, environmental sustainability, urban planning, and technological innovation to maintain competitiveness over the long term. Strong economic growth alone is not enough. Countries must also strengthen institutions and social infrastructure to achieve lasting prosperity. The Vietnamese dong remains closely tied to these broader economic developments. Currency strength is ultimately a reflection of investor confidence in a nation's economic future. As Vietnam demonstrates continued growth, policy discipline, export competitiveness, and institutional reform, international confidence in the economy may continue improving. However, professional analysts caution viewers against unrealistic expectations of overnight currency transformations or exaggerated revaluation rumors circulating online. Instead, experts emphasize focusing on the bigger picture. Vietnam's economy is evolving rapidly, attracting global investment, modernizing industries, and integrating more deeply into international markets. These trends collectively support the long-term outlook for the Vietnamese dong and Vietnam's financial system overall. Looking ahead, many economists believe 2026 could indeed become a landmark year for Vietnam. The combination of ambitious growth targets, infrastructure expansion, supply chain shifts, financial market reforms, export growth, and global investment interest creates a powerful narrative around Vietnam's future potential. While challenges certainly remain, optimism surrounding the country's development trajectory continues growing both regionally and internationally. For currency investors, stock market participants, and economic observers, Vietnam has become one of the most closely watched emerging economies in Asia. The country's ability to maintain stability while pursuing aggressive growth objectives will likely determine how strongly international confidence continues expanding in the years ahead. Many investors are particularly interested in whether Vietnam can successfully balance rapid economic growth with inflation control and currency stability. Historically, fast-growing economies sometimes face inflationary pressures or financial imbalances if expansion occurs too quickly. Analysts believe Vietnam's policymakers understand these risks and are attempting to implement reforms gradually while preserving macroeconomic stability. Another positive sign for Vietnam is the increasing diversification of its economy. While manufacturing remains a central driver, the country is also expanding in services, finance, technology, logistics, tourism, and renewable energy. Diversification can help reduce vulnerability to sector-specific downturns and create a more resilient economic structure over time. Foreign direct investment is expected to remain one of Vietnam's strongest economic pillars. Global corporations continue announcing expansion plans in Vietnamese industrial zones and manufacturing centers. These investments not only create jobs, but also transfer technology, improve productivity, strengthen supply chains, and increase export capacity. Rising foreign investment often reflects international confidence in a country's political stability, workforce potential, and economic strategy. Vietnam's young and increasingly educated population is another major competitive advantage. Demographic strength provides the country with a growing labor force and expanding consumer market. Rising incomes and urbanization may support domestic consumption growth, creating additional economic momentum beyond exports alone. As Vietnam continues integrating into global financial systems, transparency and governance reforms will likely become even more important. International investors closely monitor legal systems, regulatory consistency, corporate governance standards, and financial reporting practices. Improvements in these areas could significantly enhance Vietnam's attractiveness as an investment destination. For now, market analysts generally maintain a positive medium-term and long-term outlook for Vietnam's economy and financial markets. While short-term volatility may occur due to external global pressures, many experts believe the country's structural growth story remains intact. Vietnam's ability to adapt to changing global economic conditions while continuing reforms may determine how far the country can advance economically over the next decade. The Vietnamese dong continues to symbolize this broader transformation story. While dramatic overnight revaluation claims often generate attention online, professional financial analysis tends to focus more on gradual strengthening of economic fundamentals, rising investor confidence, and sustainable long-term development. In that context, Vietnam's current trajectory is attracting significant global attention. As always, investors are encouraged to follow official economic data, credible financial institutions, and verified government announcements, rather than relying solely on rumors or speculative social media discussions. Currency markets can be highly complex and influenced by many unpredictable global factors. Responsible investment decisions should always be based on careful research, realistic expectations, and long-term perspectives. What remains clear is that Vietnam is entering 2026 with substantial momentum, ambitious national goals, and increasing global recognition. Whether discussing the Vietnamese dong, the stock market, industrial growth, or foreign investment, Vietnam is becoming one of the most important economic stories in Asia today. Analysts around the world will continue monitoring how successfully the country executes its reforms, and whether its ambitious growth plans can translate into lasting economic transformation. For now, the outlook from major securities firms remains optimistic. Stable macroeconomic conditions, strong corporate earnings expectations, institutional reforms, infrastructure development, export resilience, and global supply chain restructuring are all contributing to positive sentiment surrounding Vietnam's future. If these trends continue, Vietnam may further strengthen its position as one of the world's most dynamic emerging economies in the years ahead. Thank you everyone for watching today's deep analysis on the Vietnamese dong and Vietnam's economic outlook for 2026. Stay tuned for more latest currency updates, global financial news, investment analysis, and economic developments from around the world.